Welcome to our weekly FinTech Nexus news show. I'm your host today, filling in for Peter, who's traveling back to Denver. My name is Todd Anderson, Chief Content Officer at FinTech Nexus. Joining us today is my colleague, editor at FinTech Nexus News, John White. Hey, John, how are you?
Fantastic. Good to be back home.
And good to have you back on the news show, and joining us again, a longtime friend and fintech enthusiast, Tim Lee. Tim, if you can maybe give the audience who might not know you, I don't know many people
Sure.
that don't know you these days, but give them a quick 30 seconds of
Appreciate
your
that.
background.
Yeah, Todd, John, good to see you guys. And
You too.
Todd, long time no see. It was a great show in New York a
Thank you.
week ago. So I'm Tim Lee. I'm been in fintech for, 20 years now. I've got the hair to show for, from JP Morgan Chase all the way to whatever that's happening right now. Just happy to be a part of it. And it's good to see both of you guys again. Let's get started.
Yeah, good to see you. So jumping right into our news stories of the week. Obviously, I don't think anything has impacted fintech as much over the course of, say, the last 5 years as the collapse and the rapid collapse of SVB. And this week, we saw the former head of SVB, Greg Becker, testify before the Senate Banking Committee. There was some interesting exchanges among some of the members and Mr. Becker. I think Mr. Becker, did say sorry, but ultimately did not take much of the blame for what happened. Essentially, put the blame on rapid rate rises and the social media run that ultimately ended the bank, and kind of the cascading effects that we're still feeling the impact of. And it was noted within that, and I think it was Elizabeth Warren, while she's very much likes to bloviate a bit. She did mention that there were 31 unresolved supervisory issues when it came to SVB. And so, from the standing back a bit, you have to say they didn't manage risk accordingly when rates were rising. And clearly, they took a lot of the deposits that they gained from 2021 and 2020 when they just ballooned in deposits and put them in securities that were just too long dated and didn't then rebalance. And so, Tim, curious to hear your thoughts on kind of what Mr. Becker said to the committee, and what your thoughts are on kind of that scene.
He was very poised and took one for the team, if you will, right? And he basically said, "Hey guys, it's not really our fault. My fault is it's really the Feds, right?" He pointed out that Feds were saying the interest rates are going up and it's only temporary. He used the word transitory, which is the exact same word that Feds used, right? But it wasn't transitory as we know it now. So whose fault is it really, right? This is what is supposed to happen when you have rates going up this high and they bought securities at a low rate. So the equity is not there anymore and there's a bank run, things don't add up. So I think the Feds or the hearing committee doesn't really want to grind them too hard. If they grind them too hard, right, then the blame game really starts, right? This is what the Feds really wanted. This is what was supposed to happen. So whose fault is it really, John? Thoughts there?
I thought it was interesting that his version of "I don't recall" was "I was fired and I don't have access to those documents." That's a new one for me.
Sounds like a SBF kind of an excuse, right? Hey, I'm no longer the CEO. Sorry, I couldn't do it.
And I'm pretty skeptical of the whole thing anyway. I think it's mostly political grandstanding to score points, and it's hard to believe anything concrete will come of it other than look who I made cry. So
yeah, those hearings are very much tough to take in. If you try to take them in as they go on, there's just so much, and ultimately, how much can you really get from an exchange that is either 5 minutes or 2 minutes long? And the answers are said in a way that kind of extends the time, so they don't get that much of a back and forth,
Yeah.
and ultimately it's like, all right, here's a few sound bites that have come out
Yeah.
of it.
This is not a Joe Rogan show, I understand, but this is really that was theatrics, right, for us. So
Yeah, exactly.
come on, guys. 31 findings. If you look at any respectable bank, hundreds of findings unresolved, right? It just the 31 is pretty clean, actually, to be told. Truth be told.
Moving on to our next story. We haven't had that much good news in either the crypto or larger blockchain ecosystem, but we saw this week, led by Microsoft, Goldman, and some other big firms, that they announced the Canton Network, which is a blockchain designed to streamline financial markets with Web3 based technologies. The blockchain is the blockchain building is obviously still taking place, regardless of what's going on in the crypto space and some of the asset appreciation or depreciation and what's gone on with FTX and others. There's a lot of underlying things happening, and I think this underscores that regardless of that, a lot of the noise in the crypto markets and crypto prices, that a lot of traditional financial institutions are starting to adjust their underlying technologies that all of us, I think, would hope one day or would run on better systems, which blockchains clearly are, than the systems from the 60s or 70s. And this points to that. I think Canton Network, they mentioned, had 30 participants thus far, some of the biggest names in financial services and big tech. And so, Tim, what are your thoughts on kind of the continued growth in some of the blockchain space, regardless of the nonsense in crypto
this
pricing?
is technology done right, in the sense that numbers of years ago we talked about, hey, there is a whole dark pool being operated by these giant multinational conglomerates, but even then that trading technology is still sort of dated. So now these private group of people, including Microsoft, essentially created a new dark pool from the trade back and forth on the same protocol of whatever security they want to trade at an amazing blazing fast speed to settle in real time, with privacy, essentially, encrypt everything onto the blockchain technologies. I feel like now the dark pool has finally moved to the 21st century again. Whatever money is being exchanged may or may not benefit, everybody on the show, but I feel like it's just the same old game, again, not a Joe Rogan show, the same old game being played behind the scenes at a faster pace, and yet to be seen. I think this is essentially technology being used within a private group of people that we may or may not see the benefit of it at the end of the day. John, what do you think?
I'm equally scared and excited. As you say, like a consortium that has no compulsion to share what they come up with. But I do like the idea that there's people getting together to see what we could do best with it. So I guess I'm glass half full today. I think I'm thinking positively about what can happen with this.
Yes, them getting together, trading faster than anybody else, right, gives them a mathematical advantage, right? Whether that benefits to the common man like you and I, who knows, right?
Yeah.
But it's been done out there.
So the next story I think might be the most fascinating, which is the OpenAI's founder and CEO Sam Altman went to the Hill and talked to the Senate committee about regulating AI, saying that he believes that if the technology goes wrong, it could go quite wrong, and wants to kind of work and talk through with the government that, yes, there'll certainly be an impact on jobs, but it also will, on the flip side, help or enhance other jobs and create new jobs. So kind of, is there a net positive there or a net neutral, that some jobs might be lost? But to me, I think the most fascinating thing is Congress continues, and maybe not Congress, but overall the government continues to get the regulatory pieces to crypto and blockchain and that space so terribly wrong. How are they going to handle this just giant shift in AI and how will that contrast to kind of how they view the blockchain or crypto technology, which is obviously fresh and new, and how they view AI? And obviously AI is being used a lot more with big tech and those types of firms today, but it's also going to go to financial services. And so there's no, avoiding it eventually. And so, Tim, what are your thoughts on kind of where the regulators and legislators sit with what AI is bringing and how they've handled some of the new technologies with crypto thus far?
Right. I felt like I'm still analyzing or internalizing the hearing from the CEO of TikTok. We haven't really swallowed that yet, right?
Yeah.
And here comes something that's completely unknown and at a fast pace. What was fascinating to me, the soundbite was when he was asked, "Hey, sir, you must be making a lot of money," and he said, "No, in fact, he has no equity in OpenAI," which was mind blowing.
Yeah.
I had to replay that a couple of times, and he does it because he loves it, right? So this guy, say what you want to say about OpenAI and how Elon sort of made a mistake of giving that up. Today he said that Microsoft controls OpenAI, which is all conspiratory. I feel like he is one of those guys that's pretty interesting, right? He's one of those founders or CEO, if you will, that just doing it because he's passionate about it. That's what really got to me as as a tech founder. But in terms of regulatory environment for OpenAI, I have a lot more fear around this. Taking the same kind of a tone, if it's not regulated correctly, it could go down the wrong path as well.
Yeah. And it could, and
it's
what
scary.
we've seen with crypto right now is you have the Coinbases of the world looking to set up operations offshore. Like we need
Right.
to embrace some of these technologies, even if we embrace it in a way that might be too stringent to start. We need to understand it, embrace it, and then let it, begin to seep out into the various parts of our society. Because the more that we try to ignore it and stop it, it's still going to happen. It's just where is it going to happen and how much oversight do you want over it? And I think they screwed that up with crypto, and eventually that will come back to haunt them. And hopefully they don't do that with AI based.
One of the Democratic representatives on the hearing committee was saying that China is using AI to instill CPP's ideology and the Chinese sort of way of life.
Yeah.
So we got to bring that back in. That's absolutely truth, because we got to use AI to promote an open society, an open market, a democratic sort of a world. So you're absolutely right, Todd. If we don't control it, if we don't regulate it correctly, it's going to go sideways very quickly.
Yep.
And one of the things we're doing right is it's cut off some of these technology, the NVIDIA chipset, those things that allows these people to train billions of parameters onto these things. We cut those technology off, and we should look at this holistically, not just from the algorithm itself, but all of the other infrastructure that enable this stuff. John.
If my love of sci-fi movies has taught me anything, from Terminator to RoboCop to what other movies? Avatar, for that matter.
Avatar. I was going to say that. Yeah.
Yeah. We definitely don't want to let it just take over and have no oversight. And I think the problem is the people who get elected are grassroots, raise the most money. By no means are they well versed in this space, and crypto is intentionally difficult to understand from the outset. I mean, it's cryptography is the whole idea is that you can't penetrate the code. So if they can't figure out crypto, God help us, literally and figuratively, if they're having to regulate generative AI. This is where
I think it's a good thing that Sam and others go to Congress. I think a lot of the earlier crypto founders, I think some clearly wanted to work with regulators. I think they should have been trying to hit Washington over the head with, hey, we want to work with you. Yes, we want to make a better financial system holistically together. And I think there was an element of crypto that was like, hey, this is outside the financial system, and my keys, my crypto. And I think that hurt the movement and put regulators on their heels a little bit.
Yep.
I like the fact that Sam and others are starting to talk to the government. Like, AI is obviously significantly wider than crypto in terms of its applications and the industries that it'll ultimately hit. And so I think the more that some of these people in Washington understand and are taught, hopefully the better they can say, all right, this is maybe where we need to put guardrails around it. This is where we let innovation start to run a little free. Because if they don't, that ultimately fear will come into play and they'll try to stop it because they'll hear about bad use cases, which ultimately killed a lot of the crypto momentum was negative
ICO
use cases, ICOs,
Remember those
stuff like
initial
that. Yep.
Yeah, remember those days? Oh, those
yeah.
were
And so
There's
I
gonna be
think
something like this happening here.
let's hope that they continue to go talk to Washington. Right. Moving to our next story, which is certainly one of the biggest successes in all of fintech, and that is Nubank out of Brazil with David Velez and others that are reported numbers this week. 1.6 billion in revenue. That's up 87% from the year ago period. They're looking to increase average revenue per customer as they roll out new products. And this is now, it looks like they've kind of passed the inflection point and they are running profitable now for the third straight quarter, which is obviously few and far between when it comes to fintech companies, making profits, or at least widely known fintech companies. I'm sure there's a lot smaller companies that are making profits that we might not all be aware of off the top of our heads, but it's a good sign. Ultimately, the share price isn't back to where they went IPO'd at, but continuing to perform, and Nubank is probably one of the shining stars in fintech in a market right now that is struggling to find stars.
Yeah, 70 million users, representing 46% of all Brazilian working adults. That's a huge market. That's a monopoly, to for lack of a better term. And they're going to start a new payroll advanced kind of a lending product, right? That's going to cross sell amongst these 70 million people. They're scratching the surface. Are they going to be at the LATAM show in December?
We're working on it.
Yeah, so I think they should come out and speak about their progress there. But congratulations to Nubank, John.
It's as the guy who writes the intros for the newsletters, it's always interesting. Anytime you see a LATAM story pop up, it's almost always positive. There's been a rare case where it's layoffs, but it's like those are super rare, and that's where we've seen the most fundraising news, growth, like this, the new product launch, market reach. It's really exciting, and I think we can look at it as a bit of a template. Now, obviously, regulatory pressures aside, we can look at it as a template for how this kind of thing can be done. And I think that's why our LATAM conference is going to be really exciting. And we saw a bit of it last year at LATAM. There's a bit of that crossover interest, and some of that news led into the US market, but I think it's going to have a real impact this year.
Speaking of impact, one thing that we continue to see struggle here in the U.S., especially amongst consumers, is savings. I think part of that goes back to early education doesn't talk about finance enough. And if that's not built into kind of how someone grows up, their first real interaction with financial services is a lot of the times it's either a credit card or a student loan as they get kind of to the age of going to college. And so Truist acquired our company and now are launching, I think the company's name was Long Game, and now they're launching a gamification app to help consumers. It's called, to help consumers save. It plays on, a lot of games and gamers in terms of how they interact with the consumer. There is some concern that the behavior in that might not catch on, but to me, overall, I think we need more ways for people to accidentally fall into savings and figure out that it's not that hard. And if this is one way to do it, I think behavior becomes learned and then it ultimately changes. And so the more options there are for people to find ways to save, the better. I think the stat is always, 70% or 60% of the population can't afford a surprise $400 bill. The more things we can do to help them, the better.
Yes, we have 4 young children in our household from 14 all the way to 6. We talk about it all the time, and I still believe that parental guidance is one of the key things that all of us should give to our children in terms of financial literacy, savings, and whatnot. If you look at Long Game, which is actually acquired by Truist, it's a Candy Crush-esque kind of a game, right? There,
Mhm.
you can link all the gems and all that stuff, and when you complete a mission, it tells you about something. But I'm not sure. My kids don't play that sort of game. My wife might be watching. She plays Candy Crush from time to time. I'm not sure if that's really the driver there. But
Yeah.
if Truist can really develop something like Henry, for example, right? Help parents to really instill some of these financial literacy to the children. I think that might be a better play. But anyways, that's just my personal opinion.
Yeah, we need to normalize like just the talking of financial services. I mean, there's so many people that avoid it, and a lot of them avoid it
Yep.
because they're not in a good financial position, so they just don't want to talk about it. But the
It's still
more that we
taboo.
talk about it, the more
Right.
we talk about it, even in bad situations, the better, because ultimately solutions come out of talking and talking and talking,
That's right.
and the
Yeah,
more you try to hide from it, the worse it'll just spiral.
that's right.
Yeah, I think
John?
it should be part of school curriculum for sure.
That's right.
Although the battles they're having now over curriculum, can you imagine?
Different show. I totally get
Yeah.
it. I totally get it, John.
Yeah.
We could have
Yeah.
a few
I'm a
hours on
sucker.
that.
I'm a sucker for gamification. I love that stuff. I'm what they call a completionist in video and board games. So I'll take the side quest
Oh.
regardless of how boring it might be.
Yes.
I'm probably not the norm, and I'm thinking, like, given my age, the Oregon Trail might be more interesting. So if it was like a narrative
I remember
style,
that.
Right.
yeah, if it was a narrative style financial services learning savings tool, I'd be all over it. So.
Right. But good on Truist for trying
Oh
and
yeah,
trying to start a conversation
Yeah.
somewhere, right? I'm not sure if that thing is financial savings is really self-learned, right? It's through sort of life experience, and the more that we have these conversations in school or in a family setting, I think the better. But good on them for creating a space for it, at least.
For sure. So our next story talks about, probably one of the bigger innovations, coming to fintech and financial services in quite some time, especially on the payment side. So we have FedNow that is rapidly approaching. They say it's going to launch in July. There is a pilot and early adopter program going on in the background right now. And Jack Henry, which is one of the main core banking providers here in the
That's right.
U.S., is now providing operational, they're basically becoming operationally ready to support the move to FedNow. They say more than 20 of his clients are taking part in the pilot and early adopter program. And really, I mean, the more we get banks on board with this, the better. It's still wait to see on kind of the version of FedNow that launches, because it's obviously not going to go from 0 to 100, because then who knows what'll happen to bank runs. There'll obviously be some caps and some limits in place, but the general consumer wants real-time payments. They think they have it in many places like Venmo and stuff. Practically speaking, they do. Behind the scenes, they don't. But now banks are going to be able to catch up. There is the clearinghouse. There's Visa Direct. There's MasterCard Send.
Right.
But now FedNow will help that larger adoption. And the more transactions that go from pending to final or posted in quicker fashion, the more healthier that consumer will be, because they won't have to worry, is this going to post or not post? And so FedNow coming, I think, is generally better for the consumer and everyone. And so it's, Jack Henry certainly getting ready for it.
Right. I'm a completeness when it what is a completionist when it comes to, what was the word you used, John? When it comes to this kind of stuff, I read through every single PDF document there is to read on FedNow.org. And I was, for the longest time, I was struggling. Why would anybody use this? There's already a lot of competitors that are doing the same thing, and you can't really do real-time debits, which is going to be great for lenders, right? Because lenders will wait for that ACH to clear for 5 days, and they don't really know until it returns.
Yeah.
But I saw a quote in this article from Walmart.
Yeah.
They're saying 46% of all of their incoming calls to their call center is for, where is my refund? I returned the stuff, where is the refund? So to them, it will be a great help to issue instant refund to reduce the amount of phone calls coming into their call center. That's crazy.
How many banks deal with, my pending says this, my available says this. What does this mean?
Current balance, available balance.
And it's the weekend. And what does that mean? My stuff doesn't post till Tuesday.
Right.
Like, the more real time it is.
Don't cash his check until tomorrow,
Yeah.
Remember all of that?
Yeah.
It still happens, right?
Yep.
Yeah, John?
Yeah.
I am kind of stunned that they've not figured this out to this point. And I know Peter will always talk about Australia clearing this problem up years ago. But it comes back to safeguards for me. And you guys mentioned that, like, will there be caps? What kind of protections will be in place to prevent the next 5-minute bank run, I guess. But I'm excited that they're finally kind of getting there, and it's going to make an impact on both sides of the transaction. So pretty exciting stuff.
Yeah, we're playing catch up as always, right? India already has this. 30% of all their transaction runs on their real time, their version of ACH. They've been implementing that for a long time now. So yet to be seen, but I think for the Walmarts of the world that have all these issues, this might be a great thing for them to push these refunds to consumers in real time.
So we have just a couple minutes left here. I did want to touch on a couple stories before getting to our last one. So Ripple acquired a crypto custody firm, Medico, for $250 million as it pushes towards tokenization tools and custody infrastructure for institutions. And then we also had news of Dave, who said that they see profitability in the somewhat near term. They said within a few quarters. And so that is exciting to see. The push towards profitability in fintech and amongst founders is only going to continue to ramp up. So seeing one of the best digital banks out there saying that they're within distance of it is good news to see. I did want to focus our last story here on kind of the PayPal and their looking to sell Zoom, which is a cross-border payments. Tim, what are your thoughts? I know that you put some time in looking at this. What are your thoughts on kind of the reasons behind PayPal selling Zoom and the pressure that they're under to kind of make this happen?
Yes, a couple of angles. First, PayPal's been around for a long, long time. Peter Thiel, a lot of the PayPal mafia has made a lot of money, but the company still thrives. They missed their earnings, I want to say, a couple of times, and they have a new sort of a hedge fund that became one of the bigger shareholders. And this, as you remember, back in February, the longtime CEO of PayPal is stepping down. Right, he's leaving. So I think a lot of the PayPal core competencies are being eroded by some of the folks that we already named. Right, peer-to-peer payments. There's a bunch of competitors out there, and Stripe, Square, all those other guys are eating into their business. B2B sort of business. So PayPal is struggling to find an identity as of right now. So I think spinning off or maybe taking Zoom, which is a Wise or is a Wise competitor, right?
Yeah. To
sell some assets off to restash the balance sheet to do some innovative programs. Way to go. But it's sort of a zombie-ish kind of a business. And if you look at their stock, it's down 25% year to date. John?
Yeah, I was wondering if that was part of a move to start loading up for perhaps acquisitions or something else to buttress their relevance. Because as you say, the last big news around PayPal that I remember was when there's so many fraud cases. So perhaps there's a bit of a hangover there. Yeah.
Right.
So,
well, now you also recently you have the company that owns Zelle Early Warning has launched Pays, and Pays is an e-commerce checkout, which obviously PayPal is very much focused on e-commerce and doing transactions online. And now Pays is a consortium of the 7 largest banks. So now banks are coming into PayPal's core business. And so I think they need, like you said, I think there's a bit of an identity crisis that they need to kind of figure out. Maybe this will help them focus a little bit if they can offload some assets that might not be performing as good as they've wanted them to, but we'll see. So
they bought it for $1 billion. We'll see how much they sell it for.
Yeah. Especially in this market.
Yeah.
But that's going to conclude our show for today. Tim, as always, thank you very much. Great to see you last week at the show. John, thank you for joining us. We'll be back next week. Peter will be back as always. And without the USA event, we are going to plug something else, and that is our digital offerings. We have a lot of digital offerings, webinars. We have ad space. We just acquired a company called FinTech Blueprint, which takes our community from here and grows it to here. There's a lot of great digital packages. We're launching some new digital packages coming up soon that'll focus on some of the biggest topics in the FinTech space. So check out those. If you want to learn more, reach out to us at any time. Just go to fintechnexus.com or even shoot me an email, todd@fintechnexus.com. Thanks, Tim. Thanks, John. Enjoy your day, everyone.
You bet.
Thank you. Have a good one. Bye.